In this video, I'm going to discuss the only 3 things you really need to know about buying physical gold and silver. But before I get into them, do me a favor. If at the end of this video you find it useful, click the subscribe button and hit the like button. I appreciate each and every one of you that do, and it helps me make more videos like this by getting the channel out there to more people. So thanks if you've already done it, and if you haven't, thank you if you do. Okay, so let's get into it. Let's discuss the only 3 things you really need to know about the physical gold and silver community, the industry, in order to protect yourself. And I'm going to start by saying that this is in no way me telling you to buy gold, to not buy gold, or to make any financial decisions, because those financial decisions are up to you. So let's start with the first thing that you need to know about the gold and silver industry. It is pretty much completely unregulated. If you're buying physical gold and silver, there is very little regulation. It is unlike any other investment that you will ever buy. In fact, it's the only investment I can think of, including buying or selling a house, where the people who are selling it to you or buying it from you in some cases have zero regulation. Literally, they are selling you a product just like any other retailer, and it is very much a buyer beware industry. They don't have to make disclosures, they don't have a fiduciary duty, they don't have any of the other safeguards that most other people who sell you investments have to have. And that creates a couple of inherent issues. The first is they can pretty much do whatever they want. They can sell for however much they want. They don't have to give you advice on which is a better product or which is a worse product. They can pretty much try to convince you based on however they feel that day. And I'll tell you from experience, I've had that exact thing happen to me, where I bought a silver bar from a dealer thinking that it was the same as all other silver bars, and it turned out to be worth significantly less. Oh, and by the way, he charged me the exact same price for it that he would have for a higher quality bar. And to remind myself of that occasion, I actually keep that silver bar here to remind myself that this is an unregulated industry and that gold and silver dealers do not have to do what's in your best interest. They can flat out lie to you, and the only real recourse that you have is to put a Google review somewhere or to go to the Better Business Bureau. And in most cases, that does pretty much nothing to solve your problems. Now, in addition to being able to do pretty much whatever they want, they can also pretty much say whatever they want. Things like Venezuela switched to gold when the currency collapsed, which is completely false. Most of Venezuela actually switched to different currencies, and there was a very small section of the country that was a mining area that started using gold for everyday currency, but the majority of the country did not do that. And the most populated parts of the country definitely did not do that. They adopted other currencies depending on where they were. And then in addition to that, they can also say things like other countries are buying up tons and tons of golds at record levels, which pretty much everything is always at record levels when you talk about economics. There's always more money being printed. There's always more gold being produced. There's always more people buying pretty much everything because that's just the way the world works. It's called inflation. But they also leave out the parts like the amounts that countries are actually buying are pretty much rounding errors when it comes to their total reserves, or more importantly, relative to the US's total reserves. And then there's the old, every reserve currency eventually fails, and the implication that the US dollar is going to fail tomorrow and it's not going to be around for a significant amount of time. All of these things are very much exaggerations of what is actually happening or what has happened, and they're things that gold dealers say in order to convince you that you need to buy more gold. And I'll get to asset allocation and exactly how much gold you should own in a second, because obviously gold dealers would love for you to exchange every last asset that you have for their precious metal, which, by the way, they can't wait to offload to you in exchange for the assets that they're telling you are going to be worthless. Oh, and my favorite misconception that is so easily disproven but is so widely spread by gold dealers is the returns relative to the S&P 500 and how gold over the years has outperformed the S&P 500. And I'll show you the actual numbers on this a little bit later, but the thing you need to understand is that gold dealers love to cherry pick dates and show you the returns in certain periods of time rather than showing you the returns over longer periods of time. So because this is such an unregulated industry, you need to pay attention to who you're buying from. And the best way to do that is to go to reputable dealers. I'd recommend APMEX or Kitco, and I'd probably steer clear of the local dealers because you just really don't know if you can trust them. Now, when it comes to selling your physical gold and silver, it doesn't really matter where you sell your physical gold and silver, because if they're willing to pay, they're willing to pay. But when you're buying, you want to make sure that you're buying from reputable dealers and that you're getting the real deal, not some bar that's worth less that he might have picked up from the last guy who came in. Now, the second thing that you absolutely need to know about physical gold and silver is that when you buy it, you are behind from day one, which means this is a long-term investment. It is not something that you get into and then jump out of next year or the year after that or the year after that. The reason why is because in most cases, you're going to have to pay a premium. And it is probably 4 to 5% above spot price, which means that you're already behind inflation from day one. So you're probably going to have to hold it for 1 or 2 or 3 years just to get to even. And then from there, you're also going to pay a premium when you sell it. So you're going to have to hold it for a considerable amount of time for it to be an investment that actually pays off. And yeah, I know what you're saying. It's not an investment. It's a store of wealth. Well, it's not a very good store of wealth if it's something that if you buy it today, you have to wait 5 years in order to just break even on, is it? But if you do have fears about the economy collapsing and you want to have a little bit just in case, it definitely is something that you should have, but know that when you buy it, it's probably something that you're going to want to hold on to and keep to pass down to your children and their children and their children, like my grandparents and my parents did with me. Now, on top of that, if you're buying things like gold and silver, when people are scared and when it looks like the economy is going to get bad and when people are thinking that the US dollar is going to collapse, you're probably already too late to the game. Most people end up buying their physical gold and silver at the top of the market when everybody is panicking and buying it, rather than buying it when they should, which is when the prices are low. That also happens to be when nobody thinks that you need physical gold and silver, and it also happens to be when nobody's even paying attention to physical gold and silver. So anytime you're putting money into precious metals, it should be when things are good. When the economy's good, when there's lots of jobs, and when, in general, things are pretty good and people are thriving. That's the best time to buy and hold for the long term. Oh, and if you buy during those times, you'll also be buying when the premiums are smaller because there won't be as much demand. And I can't emphasize this enough. You need to own physical gold and silver if you're going to own it prior to when you think you will need it. Because if you're buying it when you think you will need it, like right now, you're probably going to have to pay too much. So, unlike normal investments, when you want to sell when people are greedy and buy when people are fearful, silver and gold are actually the opposite. You want to buy when people are confident and sell when people are fearful. And the third and last thing that you absolutely need to know about buying physical gold and silver is it should not be 100% of your portfolio. Remember that old video by Chris Rock, no matter what a stripper tells you, there's no sex in the champagne? Well, no matter what a gold dealer tells you, do not put 100% of your portfolio into physical gold and silver. Period. Do not do it. Even Peter Schiff, the poster boy of owning physical gold, does not recommend more than 10 to 20% of somebody's portfolio be in gold and silver. It should be a part of your portfolio, it should be a hedge in your portfolio, but it should not be the entirety of your portfolio. And the reason why is quite simple. Because physical gold and silver, while it is a hedge against inflation, it is by no means the best hedge against inflation. And if you put all of your money into it, there's a high likelihood that you'll lose over the long run. Oh, and I told you I'd show you why you need to be careful about cherry picking the data. Well, here it is. So this is a chart of gold and silver prices going back pretty much to the 1900s. And it also shows the returns of the S&P 500 and the Dow Jones versus gold. Now, here's why this is so important. If you look at the last 20 years, yes, gold has very much outperformed the S&P 500. But let me show you what happens if you play around with the dates. If you go back 10 years, well, the S&P 500 outperforms gold. If you go back 30 years, guess what? S&P 500 outperforms gold. Go back 50 years, same thing, 80 years, 100 years, and all time. So what that tells us about the last 20 years is that gold is probably due for some sort of a correction because it is trading well above what you would expect it to relative to the S&P 500. But if you took the advice of a gold dealer or a gold guru and they said, yeah, it outperforms the S&P 500 all the time, and they showed you the last 20 years worth of data to prove it, and you took their word for it, well, you'd find yourself in a situation where you probably are overpaying. And if there's one thing that I would encourage everybody to take away from this video, it's that no matter what a gold dealer or a gold guru or any financial guru whatsoever tells you, always Google and look for the opposing view. If somebody says gold returns over the last 20 years have been X, go and Google what gold returns have been for a longer period of time. And if they say Venezuela's dollar was switched to gold, then go ahead and Google that and see if it was done throughout the entire country. Because if you always search for the opposing view, there is a high likelihood you'll be able to find both sides. And once you have both sides, then you can determine which one you believe and which information is the most valid for you. And yes, in some cases, this might create confusion, but I'd rather have you be a confused non-buyer than a clear buyer who's buying the wrong thing. Oh, and if you want to see my 800,000 view video on why you shouldn't buy physical gold and silver, where I talk about exactly what happened with this silver bar, make sure to check out this video right here.